Hello everybody, a lot to get through in markets this week. So front and center would be the Federal Reserve as well as other central banks, including the Bank of England and the Bank of Japan, potentially an interest rate cut coming in the US. We also have the resumption of trade talks between the US and China in China this time. We have big economic data on tap, so non-farm payrolls in the US is being reported, and it's also still full speed earnings season in the US, and top of the list there is Apple, which are reporting their results on Tuesday. So the backdrop to all this in markets is that the Nasdaq and the S&P 500 have hit record highs again. One would suspect the Dow is probably not far behind if we get some good results from Apple this week. Currencies, we've seen the euro plummet down close to two-year lows, down near 111. That's after that ECB decision next week. So again, interesting to see how the Fed will compare with that this week. The pound has actually been getting a little bit of a Boris bounce, you might call it. Boris obviously coming in as PM and actually being quite a hard line in terms of his Brexit policy and his cabinet appointments, with still markets brushing it off for now. You could say it's largely priced in. Interestingly, silver at a 12-month high, but at the same time gold actually a little bit sideways. Same thing for oil. I think oil waiting for some new signals in terms of the trade war to show its next direction. Now let's next quickly run through the economic calendar. So as we mentioned, those central bank decisions will be center stage, and I'll talk about those shortly. We also have CPI from the Eurozone. That's critical for the ECB to actually go ahead and do these rate cuts probably in September. If we start to see inflation in the Eurozone start to pick up again, then that rate cut looks that much less likely. Although at current levels, it's hard to see it increasing that much to really upset the plans for more monetary easing in the Eurozone. Number of PMIs, China probably the most important for the global growth story. Also non-farm payrolls, just to mention the consensus is 160, but another strong number like last month's 224 would undermine the case for more rate cuts. And so if the Fed does indeed cut rates this week as is expected, it might actually end up being one and done. So central banks front and center, and obviously what the Fed will do is the most important for the dollar and the Forex market in general, as well as other asset classes. But did want to just quickly mention the Bank of Japan. Some talk that they might tweak their forward guidance to talk about ultra low interest rates for the foreseeable future. In many ways, that's already pretty much baked into the Japanese yen. And so by doing this, the BOJ risks actually showing that they've got very few tools in their toolbox left other than forward guidance. And if traders take any just change in the guidance as the best they can do, we can actually see the opposite of what the Bank of Japan wants, which is a rise in the yen, which obviously hurts Japanese exports. The opposing idea there, though, is if the Bank of Japan do nothing, well, again, the investing community might view it as, well, the ECB are pointing to a rate cut, the Fed is cutting rates, but what are the Bank of Japan doing? They're staying on hold. That would be a divergence in policy, and so the yen should rise. So both those scenarios bit difficult for the Bank of Japan, and so hence we see a bit of yen strength potentially coming up here. In terms of dollar yen, watch out for that 108 level. That's potentially a neckline which could create some more weakness if we breach it. So the Fed is the main event this week, and so it's widely expected that they will cut interest rates by 25 basis points. And this is really fascinating stuff because it's the first time that they're going to do this since the financial crisis. So obviously rates remained low for a very long time. Recently they've been rising. Now it looks like we're going back into reverse. So the interest rate itself, it looks like it's going to be 25 basis points. So a surprise would be if they go big and go 50 basis points and cut interest rates by even more, or if they just do nothing. Both of those seem fairly unlikely given the guidance that they've already done. So then it obviously comes down to the press conference and their economic projections. And it's just a matter of how confident they sound in terms of where they go from here. And to my mind, there's a big question as to whether this is just one and done to satisfy markets and a little bit of a wobble globally because of the trade war. Because actually, if you look at the US data, multi-decade low unemployment, above average economic growth, and inflation, which is below their 2% target, but it's still doing okay. So none of that really pointing to a hugely weakening economy. It's a lot to do with the trade war, and so not really a reason for the Fed to do much more than this interest rate cut. So let's see if they actually state something similar to that in this meeting. If they do, it could in effect be a hawkish cut. Because, okay, you cut interest rates once, that's already baked in, then the dollar has the potential to rise afterwards if there are no more rate cuts to come. And then last but not least is the Bank of England. Given that Boris Johnson has just come in as new Prime Minister for the UK and that October 31st deadline for Brexit, it seems pretty unlikely the Bank of England are going to do anything except keep rates on hold. So we don't know too much about these trade talks yet, so I'm going to keep it fairly brief, but we do know that Mnuchin and Lighthizer are going over for these negotiations. So it's not Trump, but it is the political heavyweights going over there, and so that's a good sign. We've been on a bit of a hiatus in terms of negotiations since the G20, but really since May, since the trade talks broke up, and then G20 we had a pause in any further escalation in tariffs. So this is the two sides getting back together again. And I think from a markets perspective, obviously look at US stock markets, they're at record highs. Doesn't seem to be a whole lot of concern out there. Maybe you could argue there's a bit of underperformance in the emerging markets because of China and still that reoccurrent risk for the trade war. But otherwise, markets don't look too concerned. I think the feeling is that a trade deal will get done eventually, and as long as there's not too much escalation or unexpected escalation along the way, we can survive with the current conditions. So worth mentioning the earnings that are going on in the market at the moment. So in terms of the US, it's really Apple is the one to focus. But in the UK, we do have our biggest banks reporting. So the likes of Barclays, RBS and Lloyds. That'll all be important for the FTSE 100 and the general take on the economic environment given Brexit and generally lower interest rates globally. Obviously all generally a negative for banks when global trade and interest rates are both heading lower. In terms of Apple, the shares are not near record highs like the indices, but actually the shares have outperformed indices this year. Apple shares are up 30%, the S&P 500 is up 20%, so it does need to justify that outperformance. There is a big risk here that Apple somehow misses its numbers, particularly when it comes to iPhone sales, because of the trade war in China. And so that's, again, what Apple represents. A small statistic here is that Apple shares are the second biggest holding in all US exchange-traded funds. So when you buy the SPDR S&P 500 ETF, Apple is a big part of those kinds of investments, those passive investments. So if Apple shares go down, all these ETFs go down as well. So Apple is important, but it's also important in the context of the trade war. If it looks like the trade war is having negative consequences on Apple, it's going to be interpreted more widely across the stock market. So an important set of results. Let's see if they can come in and perhaps show some higher revenues from the services, which tend to have a higher profit margin than the iPhone sales these days anyway. Right, thank you for watching today's video. If you do enjoy these videos and want to see them as soon as they're released, please subscribe to LCG on YouTube and social media.